It's my question of the week, and I'll go to you on the global slowdown and its impact, how it moves over to the Federal Reserve. If you use traditional economic models, how do you fold global slowdown into ISLM and all the other theory that supposedly works? Does it, and is there a linkage?
You know, Tom, the greatest mystery now is how big is that linkage? There's no question that X minus M slowing down will slow down GDP growth, and the Fed is very concerned about that. But how does the slowdown in China affect U.S. GDP growth? And that's the real question. I think the China incident has really retaught us about how strong these global supply chains are and how the means of production globally have shifted over time so that we're much more integrated. Europe is knocked on its tail from a two-handle growth to a one-handle growth, partly because of the slowdown in China, more so than we would have thought from previous model estimates.
Bill, should we worry about defaults in China actually affecting markets?
The defaults in China is showing us how leveraged they are. And I think that's one of the things that's holding back China from really doing the stimulus they used to do in the past. Right now, if we had a traditional slowdown in China, China would have unquestionably pumped up credit and shot up the housing market and try to revive domestic demand that way. Right now, you see how reluctant they are to do so because they've already gone on a campaign of reassuring the world we're having policies in place that put a handle and a lid on the rise in leverage. That is the big constraint the Chinese are facing now, and that's why I think they're so desperately looking to make a deal with Trump.
But, Bill, is there a concern that actually these Chinese defaults at some point cause contagion?
Well, I think the contagion story is something that's a little bit more mysterious in China because a lot of the defaults, even in the private sector, are linked to state-owned enterprises one way or another very indirectly because a lot of the owners of the private enterprises are linked in some familial or other political way to the heads of the states, of municipal and local governments. And so we see that they're very reluctant to let the cascading effect that would normally take place in a Western economy occur in China. So I think we are pretty confident that they're going to try to contain the defaults. But the question is, will they be able to still push the economy?